Good afternoon, everyone. Welcome to Admiral Markets webinar. My name is Chris. Today, of course, as always, looking at charts, technical analysis, price action, indicators and tools, basically, Forex, commodities, and stock indices. For more info, of course, you can check out admiralmarkets.com, the website, or Twitter, too. We then announce new updates through @ChrisForsing and @AdmiralMarkets. First, though, be aware that this webinar and later on video is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more details. Also, please be aware that trading for exchange of global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Alrighty, first thing to do, always good to check out sorry, wrong link there. I'm looking for the calendar link. I thought I clicked it, but somehow it's not bringing me there. I'm not sure why. Sorry, folks. First thing to do, well, anyhow, you know the drill. Always good to look at the calendar. You can find that in analytics and go to calendar. You can find an analysis there too, of course, as well. The blog that I always share weekly, Sundays and Mondays, our view. Market heat map, sentiment, education. You'll find webinars, articles, seminars, the Zero to Hero course, etc. And of course, platforms, the famous MetaTrader 4 Supreme Edition with a lot of extras there. So with that said, let's take a look at the price movement as we're looking at it right now. So, well, so of course, got to be aware we have in the next days a lot of events coming up. Please take a look at that calendar really carefully because we have interest rates in the U.S., in Switzerland, in Great Britain, I think, and unemployment claims in Great Britain. No, that was Japan. Sorry. No, unemployment claims, unemployment rates in Great Britain and Australia, and the interest rate in Japan, Switzerland, and the U.S. So there are, anyhow, you get the point, pretty big events coming up. But from a technical point of view, that's what I want to focus on today. Intraday, to be precise, intraday movement. I think there's a good chance that the price is going to use the weekly pivot point right now for a potential bounce. If you look at my wave analysis, perhaps this morning, I have a fib on the hourly chart that I want to show you, which I believe is from this low to this high. And you can see the price is bouncing off a 50 fib as well. For me, this is more or less a decision zone and a kind of bounce or break spot. If price bounces at this 50 fib, it could still be a wave 4 for one more push up to a higher level, the 107.50. If price breaks below the pivot point, the weekly pivot point, breaks below the 50 fib, then I don't think that bullish bounce is that likely anymore. So why would this be basically still a bullish bounce? The reason I'm looking for is the higher highs and higher lows. We've got a clear momentum as well. And if you look at the lower time frame, what I'm looking for is as well as a fifth wave, a final push to the upside to make that fifth wave. At this moment, I think this is a wave 3 and this is a wave 4. So as long as it stays above this support level, this wave analysis or analysis in general is still valid. So I'm really looking for basically a bounce, a long trade, as long as the price stays above this level. So there was an opportunity to go long at the 50 fib, directly at the 50 fib. That's one way. There was an opportunity to take this bullish engulfing twin at the close of that engulfing twin at around 106.36. Right, that's up a few pips. And I think is a good stop loss at this moment is indeed to go below this low. I don't see at this moment any reason to necessarily go much deeper. When looking at the chart, as price was approaching the 50 fib, I would have gone with the stop loss below the 61.8, probably around 106, 105.97. Because at that point, price can extend a bit lower, can hit the 61.8 fib. So at that point, I think a bit spacious stop loss is smarter. Now that price has turned 2 bullish candles, I think it's a good chance to use a tighter stop loss. If you want to be on the safe side, it could be better to wait for engulfing twins on the 4-hour chart. Let this 4-hour candle close, let it close at a high, and that looks like a pretty good reaction of the 4-hour chart. In that case, I think that this bearish kind of correction is over. We would have a strong engulfing twin here, or at least, well, strong maybe is exaggerated, but a decent sized engulfing twin. The candle is pretty small so far for a 4-hour candle, but as long as the candle is within a few pips of the high, I think that is a pretty decent chance that this could be a bounce off that 50 fib. I think that could be the safest way to approach it, or on the hourly chart, wait for a third 1-hour candle. So it depends on how this candle closes at the top of the hour. We got 2 bullish candles in a row. One of the things I like to look for is 3 candles in a row, for instance. Another possibility is, let's take a look at the 50-minute chart here, is to look for some flag on a 50-minute chart, look for time factor on the 50-minute chart. But I don't see anything particular in mind at this point. If you looked at it a while ago, 5 to 6 candles not breaking this low would have been this candle right here. So, but that's behind us. I think probably waiting, depends. It could be okay here, to be honest. It could have been okay here too, but that's in the past/now. If you're looking for a bit more confirmation, then the 3rd hourly or the 4th hour candle close, I think is in my view, the best way to approach it. That's my plan. Now, once that happens, I think there's a good chance. I think a stop loss below the candle lows is fine. I think it's okay. It's solid. As long as the 4-hour candle close is near the high, I think it's a solid level, and there's nothing wrong. It's basically an invalidation level. So if price goes through that, through that level, hits the stop loss, then those things happen. I think that in any case, if that happens, it makes sense to put the stop loss there, because that's really where the market structure changes. If price goes into that area, then something else is going on. So what else? There's something else I wanted to say still. Oh yeah, now I remember. One of the things I'm looking for, personally, is for price. All right, there we go. To make one more higher high, get divergence between these highs. So let's say price makes this 5th push, probably will be not as impulsive as this particular part. So I'm expecting maybe some channel here. There should be divergence with the new high and this high. All right, there should be something like this going on the oscillator. Look at the bottom of my screen there, right? With the oscillator having a lower high, with price having a higher high, that is divergence. When price breaks the high, makes a new high, excuse me, I would expect price to reach roughly the 78.6 fib, roughly 107.50, turn out that 78.6 fib, and make some good downside momentum. Now, whether this is going to be a full-fledged downtrend from the 78.6 fib or just a mild correction for one more push up to the 88.6 fib is something I'll never know now. But at this moment, I think there's a good chance that the 78.6 fib could really be a strong turning spot for a decent downsize. There could be various targets I'm thinking about, from more passive, milder targets to even very aggressive targets that are aiming, anywhere, even at parity. In fact, it's possible, depending on how long you want to keep that trade. How a trader in general wants to keep that trade. I mean, that's something that's always very sensitive. Keeping it to parity will be quite a long trade and will take a lot of time. But aiming for instance, from 107.50, aiming for 106 shouldn't take too long, right? Or aiming even for 104 maybe a week, two, but not more, right? 106, a day or two, but not more. Aiming for parity, could be a few weeks there. So, all depends on the comfort level. But this is the main fib. This 61.8 fib has provided a bounce already, has provided resistance. But considering the strength of momentum here, I'm curious to see if we can get that push to the 78.6 fib and the turn at the 78.6 fib. But if price does not respect this pivot point and the 50 fib here, then we might not get up to this fib. That's basically what could happen, and it might just continue down to the S1 and continue down to the bottom, and that would be a potential breakout continuation lower. For the moment, I'm expecting a bounce to the 78.6 fib though and a turn. But if price doesn't stay above the pivot, then things are changing, and I would be putting on my bearish cap and looking for a breakout, probably by zooming into time frames tomorrow, looking for, I think, a good 4-hour candle like this with the closing below tomorrow, maybe then some smaller 4-hour candles, looking for some retracement like this, maybe even a hook back to the pivot point and a fall continuation, pullback continuation to the S1. So that would be the alternative, which obviously I don't think is the most likely at this moment, but if it does happen, that's what I think is my plan to catch the fall towards S1 and perhaps further. All right, now the 78.6 fib is invalidated if price goes through this high with the blue circle, and I'll be looking for bearish candlestick patterns on a 4-hour chart, maybe even a daily chart at the 78.6 fib. I think that's it on the euro dollar, to be honest. I really don't think that I have more to add. If you have any questions, feel free. If you are new in here by any chance, if you're joining these webinars relatively not so long ago, first time or second or third time, please feel free to let me know and ask questions, because otherwise I just assume that whatever I'm saying is understandable, and you understand why I'm thinking and what I'm showing. So yeah, 50-minute chart, by the way. It's already, of course, a bit on the late side, but the afternoon New York could see some good movement too. It is the end of London, but it doesn't mean that there cannot sometimes be interesting movements in the New York session. The market, I think, is a bit looser maybe than in the Tokyo session. That's just maybe my bias, but that's how I see it. And I think like Tokyo session, there's like just this new kind of new day, and all the levels are set again, and it seems like it has to kind of like almost break out of its consolidation. And at this point of the day, typically there's I think a better chance than in the Tokyo session to see some of those continuation moves. Now today, you can see that not a lot of things have really happened, not on the euro dollar at least, as price has really gone sideways, 27 band, and it's really very quiet on the euro dollar at the moment. So will there be a movement in the afternoon of the New York session? It could be. I don't necessarily think that a quiet date so far automatically excludes some movement. It could actually still show that movement because it's been quiet so far. So I don't think that this slowdown is necessarily means that a continuation of that has to happen. It could actually wake up. But for me to believe that it could make some decent movement, I would probably need to see on a 50-minute chart price make at least a movement to 106.75 like this, and show some momentum, and then maybe a bull flag like that before I think that it's some of interest. Yeah, good point. There are Dutch elections results. I think, if I'm not mistaken, that's tomorrow. That should be. I hope I'm correct. Does anyone know? Can anyone confirm that it's tomorrow? I think it's tomorrow. It could be already. Okay, cool. It could be already quiet because of that. Now, between you and me, I don't think that really will have a major impact. It could have some volatility impact. Don't get me wrong. There could be some price movement because of that. That could always occur, but I don't think it's going to have a long-lasting shadow because I don't think there's going to be a clear winner. You're going to have multiple parties getting a decent amount of seats, so there's going to have to be a coalition building. Now, it could be that the Freedom Party, I think it's called in English, from Wilders becomes the winner. That could be, of course, a bit of bad result for the euro specifically, and it could get a dip from that. But ultimately, I think that process is going to take long to find a coalition, build a coalition, negotiations. So that's going to drag into a lot of political talk. So I don't think that effect is going to be, as that big, to be honest. But yeah, it could have its kind of impact, and of course, FOMC interest rate, though things are pending as well. The first results from the Dutch election might, be available maybe somewhere Wednesday evening, at the very earliest, obviously, because the polls should be open, I guess, to somewhere 7 p.m. So maybe Thursday night we could expect the first results. Most of them Thursday morning, probably, indeed, etc. But bigger probably events are going to be the French election, probably. Also, of course, the Brexit negotiation process and the whole start of the procedure, which I haven't read too much about. I was just, nowadays the U.S. is a lot in the news, but at least when I look in online. But I guess it will be coming soon, right? It's already mid-March. So anyhow, that's a quick fundamental discussion here. With regard to that pound, it did make a dip. Today it broke through kind of a support trend line like this and right there, and also kind of broke through this small little consolidation zone as well. Now, it missed the 38.2 fib a bit, how I drew the fib at least. And I'm not sure about my wave analysis. Maybe my wave analysis had to like this or this. I'm not sure anymore. In any case, sometimes I draw a bit different fibs when I have wave analysis on it or when I don't have wave analysis. But the point is, it was pretty close to 38. It was at or close to 38, so it wasn't a potential bouncing spot. Now, I was still expecting more of an expansion, but price did break through support. So at this moment, let me add the oscillator because I think we're going to have, one second. All right. We're going to have a start of a new push because price did reach, what it did do was reach the long-term moving average. So any divergence that was present between these bottoms is removed, is out of the picture for the moment. We can check the 4-hour chart, and there could be 4-hour divergence eventually, but we're not even close to that yet because the oscillator is still above the 0 point. What would need to happen for 4-hour divergence is this to climb down, then move up again without breaking this bottom. So for the moment, I think the downtrend is pretty strongly in power at this moment. I think that price seems to be going back to resistance. I think there's a good chance that this is a pullback for just a continuation of that downtrend. From my point of view, I would consider that to be in a cautious mode if price goes above this orange line. As long as it stays just clearly above the lower high here, I think that everything is fine for the downtrend. What I would be probably keeping an eye on, because momentum is obviously to the upside at this moment, look at the pin bar that we had here and a couple of bullish candles, is maybe even a 4-hour chart. Some kind of, because this is a bullish candle here at the moment. So perhaps, perhaps a retest of the pivot point. That would be sweet. And if price ends up like with a wick like that, look for a bit of a retracement of the wick, and there could be weakness, something like this. Is one way of approaching it. A pending order even at the weekly pivot point. I'm not a big fan of pending orders, but it is an option to think about, but with all the news events like that, I personally don't like it. I'm not a big pending order trader anyhow, particularly in an environment that we're seeing this week. I don't think that is an idea I like personally. Um, maybe an hourly, if it goes as deep as weekly pivot point, an hourly engulfing twin here could be something to look at, or 15-minute world, a push up, a hook back, and weakness like this, head and shoulders like this, for instance, right here. Those are all kind of interesting time patterns, chart patterns on 15-minute chart, or candlestick pattern on hourly chart, or 4-hour chart. I think could be signals of a turn back down and an exhaustion and the end of a retracement. Sometimes I repeat, the methods I use, and it could be maybe a bit boring for those that are here more often. So one thing I wanted to recommend, if you're not bored by that, and if you're still curious about those methods, I did talk about that in last Sunday's blog. It's called The Secret to Applying Elliott Wave Analysis, but don't let the title mislead you in a way, because it's in a way broader than that. It also discusses, one second, it discusses some patterns I'm looking for at certain spots. And I'm going to expand on that in April probably, as an add-on to this. So if you're interested about the methods I look for, 3 large candles, 6 candles not breaking, and patterns on lower time frames, this particular article last week Sunday, the 12th, could be something good to take a look at. All right. And by the way, for tomorrow, looking at today's close could be important as well, because if today doesn't close, it closes 121.75 or higher, I would be a bit worried. I mean, preferably it closes around 21.50 at least, or lower than 21.50 would be pleasant, because if it closes below 121.50, the bears are pretty sturdy and controlled today. If it closes 121.75 or higher, I wouldn't have much faith in the control of the bears on this particular day. Dollar yen seems that expanding the correction, this is something that I was anticipating with my wave analysis, was a bounce at the 50 fib, but failure to break and expanding the correction down lower. What I'm looking for, the most interesting trade, I think, is a bounce at the 78.6 fib. I personally did not aim for this short. More aggressive traders maybe would have, more aggressive wave traders or reversal traders would have probably been still interested in that. But that's okay. I sometimes skip these types of trades. Worked so far is working out fine, I think. But my primary concern focus is a bounce at 114, and I'll be looking for a stop loss below 113.58, somewhere here, 113.55, 50-ish, 47-ish, and looking for a continuation. I would expect if I don't think this particular analysis is very likely, but if it works out, the reward to risk should be substantial. So this is one of those cases, I think, where, okay, this idea might only work 1 in 4 times, but if it works, the potential reward, I think, is going to be well worth that risk. So if it only works 1 in 4 times, but the stop loss is about 60 pips, right? And the target, in my opinion, because this could be a massive wave 3, if my analysis is correct, 117.50 would not be a strange target to aim for. So, that is about 340 pips. So that's about a 5.5 to 1 reward to risk. And I think it could go further than that if this is a wave 3. Now, once again, this is maybe not very likely, right? 5.5 to 1, excuse me, I made it incorrect. But if it's only happening 25% of the time, then and that's just, of course, a guesstimate, right? But you get my point. With a 5.5 to 1 reward to risk, the chance it might succeed doesn't have to be necessarily that high to still make in the long term a profit on it. That's my point. Another way could be to yeah, it's 350 pips indeed, from 114 to 117.50, and the stop loss at 113.40 I was counting on. So it could be a bit tighter, 50. If you take 50 pips instead of 60, it would be 7 to 1 indeed. Yeah, that's true. So it depends how the stop loss is. If you have a 60 pip stop loss, right, and you do 350 divided by 60, I was doing 340 in my mind divided by 60, and that's a 5.67. So it's funny how 10 pips, give or take on both sides, can drop from 7 to 5.67. It's really quite stunning how fast that goes. But you're right. If you do this equation, 350-50, it is even a 7 to 1, which is, again, a decent bit more, in fact. Another way would be to look for engulfing twins, more confirmation at 78.65, especially with a week like this, as I already indicated. That might be a prudent thing to do. But anyhow, my thoughts. I'm looking for bounce. May not be very likely, but I think it's worth it. There are some good things to look at. Let's face it, we've got a moving average, a trend line. We have support in here. And yeah, I think that it wouldn't be too odd. I mean, the wave structure is a bit odd because this break has been kind of disappointing. But, that happens sometimes with big breaks like that. It could still be a pullback for more upside. If it is a failed breakout, that's the risk. That could happen. I'm not saying it's impossible. In that case, if it breaks to this bottom, then probably the price will retest 112.50 and then 112 would start retesting those support levels. But, one of the reasons why, last thing, I don't want to dive into this too long, but one of the things I like about the bounce upside continuation is the fact that we had a double bottom. We have a 38.2 fib bounce. There was a strong momentum. So there's a lot of good clues that this is a wave 4. And if this is a wave 4, then that could be it. That could be the end of the wave 4, and this could seriously be a good chance that this is the start of wave 5. And if this is the start of wave 5, then there should be support somewhere along the line, and that this could be basically a beginning, a part of that wave 5. That's why that makes me a bit more confident, let's say, about the potential to continue because of this daily picture and the momentum and the bounce, the double bottom and the 38.2 fib, and also the breakout that we had. All right. Yesterday, quick recap of the Aussie was talking about the fact that price was at resistance. If it did bounce, that there were two targets, this level because of the head and shoulders and the bottom. Seems like price is bouncing at the head and shoulders. So, honestly, I don't think the 4-hour, this was not a 4-hour trade. This could have been a 4-hour trade because there was a bit of an exhaustion wick there. So that could have been an entry with aiming at this target. So maybe some of you use that video for your benefit. If not, no problem. But that was basically, the recap so far. And at this moment, it does look like a potential head and shoulders. If that is the case, then the neckline is here. All right, that's the neckline, and price could go up to the R1 if it breaks above that. There could be this space. Now that's not a ton of space. We're looking at about 37 pips, so probably would need to see an hourly candle, I think, breakout maybe like this. Look for retracement, I would say probably halfway, and look for a bounce up to the R1. Probably the best way to tackle it. I mean, there's not a lot of space, but there is this potential to move up. Maybe better could be the response at the 38 R1 turn back down like this. but it could go further. It could go to the 52, so you want to be aware of it. There is a, well, it could go even further. You don't know how far this momentum could last, but all of these fibs are potential resistance spots. There is more confluence, though, at the R1, obviously, and the R2. So, yeah, not a big fan of this Aussie, though. I'm just thinking, out loud about what I would, when I'm thinking about this, how to tackle it, but am I jumping for joy at this moment? Not so much. Not so much. Let's take a look at that, something else. All right, let me just scan some pairs with you, some dollar pairs, and we'll go to the crosses. Now the Kiwi could be making a bit of a bounce here, but I'm not sure if I don't see any particular entry on this. Dollar CAD could be a bit better. Good run up, in fact, and seems like price is making a bit of a consolidation around the pivot points. Got some wave patterns here, time patterns that haven't broken this bottom, and looks like price is pushing and breaking above that weekly pivot point on the 4-hour chart, so that's good. So this could easily be just a retracement within more upside. Sturdy momentum so far. We talked about that, I think, as well in the live webinar somewhere here, that this was a potential pullback. Although I didn't like the fact that it didn't break this top. But okay, still good run up. Could be easy continuation because we don't have any divergence on the 4-hour chart. So this could easily be a retracement. This is quite choppy on a 50-minute chart. I'm just thinking what could be an interesting way to tackle an entry potential on the dollar CAD. Well, if it does get down to S1, I think that could be interesting because that could be, for instance, an ABC zigzag like this. That could be a correction, minus 272 target, 133.75. That could be an interesting bouncing spot within that uptrend. I would enjoy that, but I'm just thinking if it doesn't get down there, then in that case, I don't see much alternative than waiting for a move down to the bottom of that flag, wait for a bounce there, or wait for a break above the flag and wait for a bull flag kind of correction like this. Because right here, from my perspective, it doesn't make sense. Either way, it's too much of an uptrend and it's in the channel now, so going long is not the right moment now, at least. All right, Mario is asking for Euro Yen, so let's take a look at that. Last week, quickly, we talked about how this candle closed, is important because that would indicate a breakout or a bounce or reversal. It was a bounce, not a reversal. Had another bearish candle, bullish, doji, and then the continuation. So that kind of shows you, I think, how candlesticks can work nicely to warn you that there might be a bigger pause, but it doesn't mean that every single bounce like this is a reversal, right? I think that this is a good example of that. So we had a break, pullback continuation basically, and price made it up to the minus 61.8 target after a 38.2 fib bounce, and pretty good momentum to the downside at this point. So following the dollar yen basically, and the euro dollar, I'm expecting a bounce. So from this perspective, euro dollar up, dollar yen, in my view at least, dollar yen still some space for down. So I wouldn't be surprised maybe to see some flag being built at the pivot point like this. So I'm probably more interested in the dollar yen and the euro dollar than the euro yen at the moment. But if anything, it could be worth looking and investigating, and that's I think what we're going to do right now here. What I will do right now is look at the bounce potential at the pivot point. It did reach a target, but doesn't mean that it's necessarily over. Let's take a look at higher time frames to get a bit of a perspective on that. So last month's high has been broken. 2 bullish candles in a row. Pretty good breakouts. So far, good momentum candles. Weekly pivot point. Also important, no divergence on this 4-hour chart between these tops. So let me check one thing here. All right, so let me put a fib from here to here. There's horizontal resistance on the left. So I think one of the key questions is, did it finish 5 waves? Or is it going to extend with one more push up and one more higher high? All right, so let me check. Let me check this 1 second. This could be, I'm just looking at the waves at the moment. It could actually even be, if this is wave 1, 2, 3, 4, this could be 5 waves on its own, 1, 2, 3, 4. And in that case, I could even put a fib from here to here. And the 50 fib would be a very important level. Price should not break below the 61.8 in that case. Definitely not break below 121. So it could be maybe interesting to look for a bounce at the pivot point. Still one more bounce and push up. It could be a slow start. You know, it could hit the pivot, could go really flat like this before maybe then slowly but surely eking out an upside continuation. That would not surprise me in a way if something like that happens. That's a pretty precise kind of sequence of events, so it doesn't have to be exactly like that. But I think that's a pretty good guesstimate at the moment. So I would be interested in looking at the bounce at the pivot point. Now the question is which time frame and how, from my point of view at the moment. And I do want to be realistic about it. It could, if it doesn't bounce at the pivot point in 50, or if it bounces but then breaks lower, you know, I want to be also aware that it could then be retracing basically in this entire leg. So I think this particular wave 4, the invalidation level is the 61.8 fib, probably 121. Well, technically, officially, it is the high of this candle, 121.11, right? But unofficially, I think it's not as very unlikely, or well, definitely unlikely. Maybe very is too strongly, but that if price breaks below the 61.8, that it's still a wave 4. That doesn't seem that likely. So, you know, 121.35, 121.30 makes sense too. If an aggressive trade, it might even go up to 121.47. All right, but that depends. If price on the hourly chart, for instance, oh, the hourly chart, we already have bullish engulfing twins. Actually, look at that. So who knows? Maybe it doesn't even get that low. Maybe this is the bouncing spot already right now. But let me just finish the story down on a 4-hour chart. Let's say that I have engulfed a bullish candle here, right? In that case, using that candle low, I think makes sense. But as long as we don't have that candle, then going with the stop loss between the 50, 61.8, below the 61.8, or below this top is better. As soon as a 4-hour candle, however, reacts and bounces, then I think that candle low, maybe let's say a few pips below that, obviously, give a bit of space, is a serious option. So yeah, that's the 4-hour. Will we get that reaction on a 4-hour chart? That remains to be seen. On an hourly chart, we do see some two bullish candles, a bullish pin bar, and this does look like momentum, bear flag, momentum. And what could that be? It could be an ABC. It's still above the weekly pivot point. So let me take a look at the 15-minute chart now. 1, 2, 3, 4, 5, 6, 7, 8 candle. Even here, it could be a very kind of good hook back for a bounce. That hook back, particular hook back, I think, does not have to break below this bottom. Otherwise, it could retrace deeper, could go down to that weekly pivot point, although that's not too far from here. So any trade in here, I think, is still better probably to go below the weekly pivot probably at 121.70, 67. But this could be a hook back. It is, from a time factor point of view, already has kind of completed this downside. London is over, so from that point of view, it could make sense. Another confirmation could be maybe too many confirmations, but still waiting for engulf some kind of reaction here, some wick at the end of this 50-minute candle, 2 minutes from now. Let me take a look at the 5-minute chart very quickly. I think it looks interesting to me, this 5-minute bar here. So I will try just a small one with a tight stop loss based on this. And I'll go to 121, as I was saying, 121.70. Now, I mean, in this case, even a tighter one could be used, but I don't think it's worth that particular. I think with a weekly pivot point so close, it makes more sense to use that particular level for my advantage, if you see what I mean. There's also 121.75 round level, quarter level. So why not use that in a way? Why go below this low and then have the pivot point just below it? I don't know. I mean, if that pivot point was a bit higher, and was right here, right, then I would probably feel okay with going below that. Now, I don't know. Why not use that in a way just to shield my stop loss just a tad more? I think, from my point of view, makes sense. Yeah. So let's see. 50-minute chart is. Let's just wait for this 50-minute candle to close. I think there's a few seconds left. I guess 1 second. Oh, there it is already. That was fast. So it's a doji, not bad. Indecision candle at the bottom. Looks like a weakness kind of pattern. Now, will that happen? Who knows? But I think there's enough kind of elements to think about that make sense here, from my point of view at least. All right. So thanks, Mario, for pointing out this euro yen. But only time will tell if it makes the bounce, of course. So let's see. Now, what else? Pound yen, not as appealing below the pivot point. I don't like this particular formation at the moment. If anything, it looks more bearish, in fact. Pound is weak. Dollar yen is moving down. Still some space to the downside. So that does make sense. some space to this bottom, the bottom of the channel, and the S1 broke the pivot point, so that could make sense to see a follow through. But I don't see at this moment a particular entry that I would like. What I would probably need to see is I would probably put a fib from here to here. Yeah, I probably would need to see a deeper pullback. I would like it to 61.8 maybe, close to 140. Psychological round level, trend line, that would be a good pullback. And price should not break above 140.50. So that is something I'll keep in mind, my eye on. All right, some other crosses, Euro odd. Alrighty. Kind of the same structure, really. Nothing new to add. It seems just the euro odd is maybe a bit different than the euro yen because it's below the pivot point. Pound out also pretty weak, just like the pound yen. So maybe just a bit more retracement. I don't know. It's ultimately it's in a triangle like this. So yeah, if it gets back to the weekly pivot point, back to the top, maybe something to think about. Not jumping for joy here at this moment with this particular structure. I mean, it could even, sorry folks, I'll be back in 1 second. It could even bounce here, but I don't like the pound weakness, to be honest. 1 second, just give me 30 seconds. All right, I'm back. My wife, I would just need to leave again a few seconds. My wife left the house without her keys. It's prudent of me to open up the door there. Yeah, otherwise, you're right. I'm not found out. I'm not fainting from them personally. Maybe, I don't know if you see something in it, but I'm not a big fan. 1 second. Be back in a second. All right, there I'm back, and that's about it, I guess, for today. From my point of view, I think the other Euro New Zealand, Pound New Zealand, they seem to be all making that same structure. So, I guess some of my ideas could be applicable to those two. Euro New Zealand, Pound New Zealand, though, have made a huge run up, showed the New Zealand weakness. So there are a bit difference, by the way. Be aware of that. Due to that momentum, actually, I would probably be more inclined on the Euro New Zealand upside bit. Because the euro dollar is probably bouncing. Euro New Zealand is very strong. Weekly pivot point there could be an interesting level. A lot of momentum, a lot of bullish momentum there. And this does look like a three wave. So from a Euro New Zealand point of view, I would think an ABC zigzag. Hang on. To 153. No, that could be, I think, from my point of view, a pretty interesting level on this Euro New Zealand. Yeah, that looks pretty sweet to me. Good momentum, ABC zigzag. Might be a good turning spot. And I wouldn't be surprised to see one more higher high on that Euro New Zealand. Alrighty. Let's see. Euro dollar, we can take a look one more time. Euro dollar. I wouldn't be surprised. I'm looking for basically, quick recap here of the euro dollar is for price to make a bounce at the weekly pivot point, to bounce up to the 78.6 fib and then make a turn at the 78 or 88.6 fib. And that turn could be quite substantial. So one more higher high, there will be divergence between these tops, and then I would expect a bearish turn. If price does not bounce at the pivot point and make a bullish bounce up to the 78.6 fib and fails and breaks below it, then I think that the 61.8 fib could be basically a turning spot. And that could be then maybe a larger reversal area. But then it would have to break below the pivot, and it could be a breakout onto the S1, and then a breakout below the S1 to the bottom here. So pivot point pretty important for either a bearish breakout or still one more bullish bounce up to a higher fib. In my view, I think the bullish bounce is still more likely. But one of the things to look for me is whether this 4-hour candle closes near the high. It's a small candle. If it's anything bigger, it'll be pleasant. But especially a candle closed near the high, I think is a decent signal that there's some reaction and a bounce there. So I'll be looking for a bullish bounce and a move up to 107.50. That's my analysis, my preference for the moment. But of course, if it does break below, if we get a candle like this, for instance, closing, and it breaks below these lows with a good 4-hour candle, maybe a bit of a hook back on a smaller time frame, and probably a good chance it will fall down to the S1. All right. Well, folks, Urian hasn't done much, so time will tell about that. If you're looking for more webinars, I hope you are. Nennet goes with his live trading session 2:45 Central European Time, 1:45 p.m. GMT time. So looking forward to having you there. Now, 15 minutes after he finishes, I'm already back. So you got a small break, and hopefully you'll continue with me. And we're going to take a look at intraday again, breakout and bounces, more of the things we talked about today. And then Thursday, we should know more about all the events that have occurred throughout the next few days. And we're going to be talking about, well, it's a pretty good topic for this week, market volatility and approaches to that. And I think that there's going to be some pretty good examples I would expect from this week, but let's see, on the Thursday, 5 p.m. GMT time. So hope to see you in those webinars. Wish you all great trading, folks, and see you soon. Cheers.